Welcome to StockOdds Odds and End podcast. This is Dave and Rob getting ready for the week ahead. Good evening, Rob. How's everything?
Too bad. We kind of blew our streak of doing it on Saturdays. Today's a Sunday, so sorry about that, guys. A little bit late, but we'll get right down to it and get this thing posted as soon as we can here. So, reviewing Fridays and the week's performance. So on the Friday, we had energy popping up. That could be a little bit of just some geopolitical stuff that's going on. Could be a little bit of concerns for, what might happen if there was a 9/11, terrorist event again or something like that. So I'm not sure why Friday popped up like that, but utilities were in second place. But for the week, energy sure did well at 2.51% up, and utilities was second place, but not green for the week. But certainly a big change because so far this year we haven't seen a whole lot from the utilities, and they may be coming into their own here in September and possibly even October. We'll have to take a closer look, but a little bit, of defensive came into play more so than what we saw in August. So let's keep going here. Performance for the week, we see IWM, so small caps having it rough. And again, we're in the worst 6 months of the year for small caps, which is May through October. And Q's doing a little worse than the SPY this week. And you can see energy there really in the green, 3.52%. So that's the sector SPDR ETF, which did better than the group with all the market caps involved, which is what we saw on the previous slide. And that was only up 2.51% for the week. But sector SPDR wise, you got Exxon, Conoco, Chevron, big names in there. Financials held up okay. A little bit probably of benefit there from rising yields again, maybe some, posturing that further rate hikes are on the table, even though the market's not been expecting that. We had industrials kind of lagging as well, not having a great week. Consumer staples, you see them held in a little bit, a little bit worse than the discretionary. Discretionary, of course, has Tesla in there and some other names that kept it propped up. And here's your utilities here. So that's what we see for this week. I wanted to point out too the volatilities here. So just keep in mind, this is the weekly volatility and this is the monthly volatility. So XLY is one of the ones that gives you, the best back and forth action, kind of like a loaded spring, really. And that's on the weekly and monthly, which are quite similar. You have volatility picked up a bit on the utilities, but on the monthly, it's a bit quieter. And what else we got here? So SPY, you can see the comparison here. So the XLY is double the volatility on the weekly of the SPY. So keep that in mind when you're trading these things. And diamonds, of course, it's a price-weighted index, so and it's got all the blue chips in there, so it's a lot quieter than the rest of these things. So, okay, this is what happened last week on the SPY. So Friday was the first trading day, and also the first Friday, and then we roll into Tuesday because it was a shortened week. Tuesday we opened here. And we traded a bit sideways, kind of as a follow through from what had happened the previous week. But then on Wednesday, we we gapped down and we dropped significantly, had a pretty nice reversal intraday to finish, a little bit better than, of course, the low of the day. Next day, dropped down again, but that was able to claw its way back. We weren't making any more new lows, and we finished much better. And then the next day here, we ended up filling the gap and proceeded to move higher and pulled back a little bit by the close. We had a really strange last 15 minutes of the day there, bouncing around quite a bit. This is the map of the market for the week. You can see the shine or the glitter came off the NVIDIA this week, minus 7.67% down. Also, Avco having a bad week at minus 7%. Qualcomm minus 7.33. Intel moving completely the other way, up 8.17%. So haves and have-nots here in the semiconductors. And oil patch, of course, them doing really well. Some healthcare, Lilly, again, behaving quite differently than Pfizer and even Merck. Having another good week. It's been having a pretty good summer, and that party continues. Healthcare overall doing well. See a difference in Netflix versus Disney here. And then, of course, you had the Apple incidents this week, down 5.16%, with China kind of playing the tech wars here, saying that Apple phones are not eligible for their leadership and officials to use. So kind of a damper on Apple. And that probably pulled the market down a little bit with it as well. But Microsoft held up okay, Oracle, Fortnite. So there you have it. Okay, mid-month seasonality for ETFs. Dave, what do you see on anything pop out at you? Notice
pretty much everything's down.
Yeah, notice this, and this should say mid-month seasonality right up here. Mid-month seasonality. In this universe, 81% of the values are down. So that means that the September, down month continues into mid-month seasonality, when you can often, in many of the months, get a nice bounce because of payroll deposits and 401k money going in mid-month as well as the end of the month. But this particular mid-month seasonality is not the best historically. Anything that you like on here?
Well, it shows strength in gold. You see GDX and GDXJ. That's something you can play. But pretty much every other sector, it's negative, with like communications, basic materials, and discretionary down greater than some of the other ones. Financials too, but a lot of weakness in basic materials and discretionary.
Well, and not only that, I mean, we point out here, when you combine not just the performance, but also look at the odds. This is odds of going down, and so a lot more robust. So the probability basis, along with the outcome, the performance, definitely leaning to the short side. Whereas here you've got a lot of 50% sort of like on the fence as far as going up, and even when they go up, the performances are quite a bit less.
Yeah.
So definitely skewed to the short side. Now, that may be interfered with something else, but as things are looking, if the seasonality also lines up with a good macro backdrop for the downside, then be informed and don't fight it, and play along with the probabilities, okay? So that's the ETFs. So then what we do is we go to the stocks and we say, okay, in those groups that we just looked at, is there anything interesting? So, for example, I wouldn't, if, XLE, well, it doesn't have a great probability of being down. It's only down 1% too. So let's look for something here in the basic materials. So XLB, let's go back to our thing. So AA is in XLB, or at least related, it's associated with basic materials because of aluminum.
X
And
is,
yeah, what is it you say? X? Yeah,
letter X.
steel as well. Yeah. So that would be good because the ETF is already suggesting it to have underperformance, and then you want to find some of the stocks within the group that will give you your best bang for your buck, right? Right. Mm-hmm. So that's what you will look through here to find. Also on the stock side, we have more symbols represented, but still 70% are negative values by percent change. So again, look for things that are over 50% odds of going up or over 50% odds of coming down. Now we have expiration. So that mid-month starts on Thursday. And then of course we roll into Friday's expiration, which is a quarterly event. So this is probably more powerful than just any monthly expiration. What leaps out at you there, Dave?
Well, again, some of the same industries like XLB expected to be weak. So you get kind of two bits of seasonality on that one. Same with industrials and technology. So
yeah, I would tend to lean on it then a little bit more, unless there comes along a macro that interferes. But again, some of the edges that we need to consider are where are these groups and stocks as we come into that seasonality window. So the window starts on Thursday for mid-month, which is the 9th through 14th business days of the month. And then we roll into the third Friday, which hits pretty early this time around because September 1st was a Friday. So it's all of a sudden upon us. And so like Dave said, you get that, double sort of probability skew between mid-month and the Friday expiration. And that would be nice if that continuation happened in, like, say, the XLB. And now we see XLE coming into play. It was kind of like, kind of not as fantastic for mid-month, but all of a sudden on Friday it's showing better. So I'll let you guys look through that, but it's the same theme. We roll into the stocks now, and we're looking, here's US Steel, Dave, showing up again.
Yeah.
So I'll give you some, and here's Freeport, but it's only 50% chance of going down. So it's on the list, but it's not as strong as our argument for US Steel. Okay. Now, value versus growth, we looked at it last week as well, but this is a weekly chart now. So I just want to show you that we had value dropping in relationship to growth for the 3 weeks previous. And then last week, we popped up a little bit. Probably again because of the down week, a little bit more defensive posturing. Obviously Apple and some other things were playing into that. So because it's pulled back, it wouldn't surprise me if we're able to pop up a little bit and value still beat out growth next week. But it also could, resume its decline down. There's plenty of air pocket here, so keep that in mind. It's unknown where we go from here, but just pointing out the contrast between last week, which was a shortened week, and the 3 weeks before that. When we look at diamonds versus IWM, and again, this is a ratio chart, it's 1 week, you can see the outperformance of the Dow 30 compared to the Russell 2000. Nice strong week for that. Obviously, IWM had a pretty bad week, and Dow held up because of more the defensive blue chip, the nature of it, even though Apple's in the Dow. Then we have Microsoft versus Apple, just seeing what's going on there. And again, this is a weekly ratio chart, and you can see the strong performance here. And just as a reminder, when you get a news event that comes out, and even if the stock has already started to move or even gap down, you might see opportunity in it, but it's really good to go and grab another relationship that can keep you in trades for much longer, not getting shaken out, and also kind of protect you from, in case you're wrong, and let's say you shorted Apple and it started to turn and go up, if Microsoft was already a better argument. And so look where you're coming from. When the news hit at the beginning of last week, the news hit on Apple, Microsoft was already discounted relative to Apple, and Microsoft outperformed Apple handsomely for the week. These are where edges come from, is when you get some reason to be in a relationship, but your starting point is fabulous. Now, economic calendar, Dave's going to talk about that in a minute, but things to watch in the Americas, we've got US CPI, PPI, retail sales, and so on, industrial production. We have, and we've got some ECB meeting as well, things like that. So just could take a snapshot of that, or stop the video and just take a closer look at that. We'll go into the next one here. Dave, what do we got?
Yeah, Monday and Tuesday, not much going on, but the theme of the week is inflation data. So Wednesday, there's that core CPI number, and then Thursday, the core PPI number. So consumer prices and the wholesale prices, right? So that's going to give us an indication as to if inflation is really decelerating, and then that indicates what the Fed might do at the next meeting. And then Friday, there's a bit industrial kind of data, U.S. import prices, industrial production, manufacturing data, and consumer sentiment. So it's a week of inflation data, and and earnings. There's not many earnings this week. So there's just Oracle on Monday and Adobe on Thursday. So most of our earnings season is past now, but those two are heavily traded. So Oracle and Adobe.
Yeah, and a reminder that warning season will start to happen towards the end of September, and we go into earnings season again in October. Here it is again. So July, it started the heavier in the first 2 weeks of July. You get the heavier earnings, and then of course continues all through August. And the same thing applies to October. Earlier in October, you get some of the bigger companies, banks and brokers and stuff like that. And then it continues in through November. Now, remember that in the off months, when it's not earnings or there's very few earnings, you have more dividends. So you still have to make a note of stocks that are having dividends. So if you're short them, you end up paying them. If you're long, you could collect them, but you still have to be aware of, dividends, which some people overlook. Okay. A couple notes here. Anniversary of 9/11. So that's tomorrow. So if nothing bad occurs, markets can bounce, just because they kind of are a little bit leery, even though it's been 22 years since the event. It's still fresh in some minds, and also always a concern that some adversary tries something. So if it goes okay tomorrow, then markets could bounce. Just keep that in mind. Probability is still weaker for the month of September, and certainly we looked at mid-month seasonality starting on Thursday, and even the expiration Friday is weaker. But it could be a bounce on Tuesday after tomorrow's non-event, let's say. So this week is historically weak, and then I want to review the U.S. dollar upcoming resistance level and review the WTI resistance level. So let's just look at that here for a sec. And then, yeah, here we go. Okay, so US dollar first. So when we bring the different currencies up here, you can see that since the mid-July, we've had this steady rise in the US dollar. And at the same time, of course, you've had a decline in the euro. So why is that? Well, the US economy has been doing really well. Now, I recognize that there's been some economic reports that have been revised and come out, but as those reports initially came out, you know, it's like the economy's firing on all cylinders. So Europe's been kind of the opposite. They've been having more economic struggles, right? But we do have an ECB interest rate decision, I think, this week, or discussion on monetary policy. So it may change. They may be raising rates, but so far that's what's been happening. Japanese yen, you borrow the yen, you buy the US dollar, you got the carry trade, or you buy US assets. So the carry trade, you can see the yen under pressure. British pound, British economy not doing as well as the US economy is again. Canadian dollar down, even though it's commodity rich country, same as Australia and New Zealand. And normally if commodities are in bigger demand, the currencies can pop up. Now with energy still rising, that may impact the Canadian dollar, may help boost it a little bit. Okay, so let's drill into this US dollar for a minute here. And you can see that we have a significant resistance area at around 105.50, 105.64. So 105.50 to 105.64, there's resistance right in there, and that would be a target that we could get to, and we'll have to see what happens if we pop through that. We are above the 200 AMA, so we had a nice bounce off that. So it's, you know, could continue. Now let's look at energy. We see crude, you know, making some solid gains. Now we've kind of got a bit of a shelf developing here. We still have some upside potential into the 93 to 94 area. This is 93.74, and this is 93.64. So we've got almost matching highs, pretty close up in the 94 area. So keep that in mind as we approach $94. There's should be some resistance that will give us a clue if it wants to go higher or not. All right. Anything else, Dave?
No, that's it.
Well, let's wait a minute. Let's just take a look at any of the markets here. What's going on with these things? So actually, ahead of tomorrow here, we're pretty flat across the board. Nothing going on.
Mm-hmm.
So I guess I have to check in the morning. The VIX is pulled back a lot in August since the peak, and even with the bad week last week, we didn't move much up in the VIX. So volatility is lower than it has been for the last year on average. Keep that in mind. Okay. All right. Well, thanks everyone.
Good luck.